investments we do are one, real estate's another one. And we have two experts in that area, Mark and Karen Spalding, who are going to talk to us about real estate as an investment, as well as just, things to know on that area. So let's jump in on the investment side here. And one thing I will say, and I always like to come back to this sort of the way we did with the prayer, what are your grounding principles? If you look through these principles, and I'll just let y'all read the slides, but we've been spoiled over the last year. And when you get spoiled, sometimes when things go back to normal, you think things are wrong, and they're not. They're normal, but we've been spoiled with markets going straight up since April of last year. And I would bet this next year is going to be tougher than this year. I might be wrong, and I hope I'm wrong. But when that happens, we need to remember, what is our core? What are we trying to do? We're trying to always stay objective and independent, always do margin of preservation, always remain diversified. Great example there is, you look at something right now, let's take, and this is not something I advocate investing in, but let's say Bitcoin. Yeah, Bitcoin's making a lot of money now, but, I wouldn't run out and put too much money in it. Stay diversified. Let's see here. Why is that slide not going? Okay, there we go. Invest with goals in mind, invest with flexibility, and always invest with humility. So remember, even though you have ideas, you might not be right. All right, so with the investments, when you look going on, and we've had this nice rotation out of growth that did so well last year into value, and we started portfolio accordingly. It's an opening up trade, and the economy, whereas last year only certain sectors worked, as more and more vaccines and more people have had the virus, and we approach herd immunity, things are starting to open up, and the pace of that has really looked for a strong back half of 2021. Sorry, guys, I'm not sure what's making this go or not. Okay. Computer's just a little slow. And then one thing we're looking for is what's happening in the economy outside of the open layout. Well, we have some of the highest GDP estimates for this year, really ever. And a lot of that has to do with economic forces as well as things the government's doing. But when you look at it, we have inventories and a lot of products low, and so we have to rebuild those. That's economic activity. We have economy reopening, which is obviously pent up demand, economic activity there. How many people are doing spending on things like vacations and experiences they weren't able to do last year? With this, we do expect some inflation, but short-lived, mostly because of this. And then you have the infrastructure bill. And when we talk about the infrastructure bill, I really want everybody to take their political hat off and leave on their investing hat. So there's three ways I would look at the political or the infrastructure bill. One, what's my political opinion of it? That's not important as an investor. Second, what's my advanced planning or tax mitigation feeling of it? That, again, is not necessarily the most important thing as an investor. It's very important to life, but tax mitigation and investing are two different things, and we got to keep them there. So there might be parts of this infrastructure plan, for example, that I like as an investor and I know I can make money off of, but I don't like as a taxpayer because I can see where that's going to lead to. But we're going to leave on for this conversation our investor hat, and we can talk about those other two at a different point in time. So where's this going? When you look at, and what I'm talking about when I'm showing a slide like this, and we'll go into it a little bit more, is when you think about money being spent, if you look at where that's flowing, it can really give you some ideas on investment thesis. And so what you start to see in a lot of this is a lot of electric vehicles, a lot of transportation money, a lot of greenifying our country, and that is a business opportunity for people in those businesses. It might be a negative for people in other businesses, but if you see that shifting the money over that way can be quite profitable. And so when you look at this money going out, you look at these top areas, and no wonder the stocks that benefit from these have been doing fantastic and probably will continue to do that. Also, manufacturing, going into manufacturing, and then looking at things like semiconductors. I mean, obviously, when you see the shortage we're having now, that goes with that inventory rebuild. And you can see that there's going to be investments into those types of industries because we need more than we have currently in that position. And then also one thing I would say very much, and when you look at this National Science Foundation, a lot of these are the kind of jobs that move technology forward, that move some conductor industry forward. There really is kind of a reversal under this current administration back towards a more science-based economy. And again, that creates, investment opportunities in those spaces. And what you're really looking for as an investor, and this is true, it's not necessarily that money can be made everywhere, it's that money can be made somewhere. And how do you then benefit off of that somewhere? Another one, and maybe this ties into the Spaldings a little bit, a lot of money going towards affordable housing, a lot of money towards high-speed internet. What businesses benefit from that? What locations benefit from that is a question I would ask. And then this is all right, so that's really it on the infrastructure plan and where that's going. But now we start moving to some other areas of the economy. This is really interesting. And yes, we have a very high unemployment rate, but we also have a record high number of job openings. And when you have a record high number of job openings and companies can't find people to fill those, a lot of times you start to see wages climb a little bit. And so if wages start climbing, that helps those people, but may actually hurt the companies that are having to pay those higher wages. And some of this has to do with unemployment being so high. Some of it also has to do with just appropriations or miscategorizing people's skill set. So, if you work very well in a restaurant or hospitality environment, that's great, but you might not have the skills needed to go work in a factory. And if those jobs are in a factory and not in a restaurant, the two don't line up. And not only would you maybe not want that job, but they might not want to hire you for that job. And so we're having this weird dynamic where companies can't find workers, but certain workers can't find jobs either. And it'll be interesting to see how this plays out. And that's certainly, in my idea of risks, one of the ones we're watching the most. Because if you think about the companies we're investing in, if they're too high, that could be a negative on their earnings. But then one of the positives I would show here is, yes, we have this GDP growth, which is awesome and positive, but you're hearing a lot about inflation. And when you look at it, the inflation just simply isn't there on a concerning level. It's still a lot higher than it has been, but it's below kind of historic trend. And one angle of looking at that, and I always say this when people about their investments, is what time frame are you talking about, right? So if you say, I don't want to, my first question back to you as an advisor needs to be, over what time frame? Are we talking over a 1-day period, or are we talking over a 10-year period? And those are very different risk return type of profiles, right? I can put you in investments that I'm confident will do well over 10 years. I might have no idea what they're going to do over the next 10 days. And that can be a little bit dangerous. And we're going to talk about this with some of the commodity trade and stuff that's doing well right now, upcoming here. So these commodity trades, if you look at commodities since April of last year, and this is part of why you're hearing a lot about inflation, it's up 50%. Well, if you think back to April of last year, what were we all doing? The context that we started this out, we're sitting around our house, and things like oil and gas actually went negative because no one was driving or traveling anywhere. So of course that's going to show up a lot higher, and this demand for the inventory. So yes, commodities are up 50% since 2020. However, they're down 60% since 2008. So we've had deflation. If you look at 2008 till now, we've had inflation if we compare it to last year. And that's comforting. And it's actually comforting to see it going back the other way, because deflation can be a negative in its own right, simply because people put off doing things. Or even, let's take the decreasing price in oil and gas. That was great for people when you go fill up at the pump, but it was not good for companies like ExxonMobil and BP to really, make the profits. You're actually seeing now that gas has gone up a little bit. So there's always two sides to that coin. And then the one thing I'm going to say about the bonds, we've talked a lot about stocks, but so far year to date, and this is important to think about when we think about bond investing. If we stopped the year right now and the bond index did not go up at all, it would actually be the worst year for bonds on record. And part of that has been, and this is something I want to let you guys know we've done with your portfolio, is protecting it against rising interest rates. And you do that with short duration bonds, you do that with high yield bonds, you do that with floating rate bonds. But if you just go with regular intermediate bonds, what you had in 2020 with COVID is rates plummet, right? Well, bonds move one way when rates plummet, and then they move another way when rates go up. And in 2021, we've had that start to move up or normalize. And I think that's pretty natural and actually a good sign that the recovery in the economy are going to go back to a more normal footing than what we've been on. And then also one thing to point out, we are having record high buybacks, which again is another bullish sign for the stock market. So all that to put together, and those buybacks have been centered in tech, but all that to put together our, let me see, all right, strategy summary as of right now. So here's kind of the big overall of what we're seeing on the investment landscape. Strongest economic rebound in history, or one of the strongest in history. That's fueled in areas where there's a little disruption on the supply chain, fast-paced recovery, and a temporary surge in inflation. We do expect rates to continue to, you could say the word rise, I might say normalize. And if you think about basically all asset classes, they went down at the beginning of COVID, and they've kind of gone back to where they are with the exception of fixed income and bonds. And so that's just kind of normalizing. But then what we do expect is by about 2023 to have a more normal growth and inflation type environment than what we're in now. And I think any of us would say the past year has been anything but. And then certainly because of this more normalization, there are going to be some awesome trades that may work for short periods of time or the next 6 months or the next 2 years. But we would say tread very lightly on those because you don't know as we get back to this more normal 2023 environment, what might happen in those situations. And so we would definitely say take a longer term view. Even if you miss out on some short-term opportunities, go back to your principles and allow yourself to do that, to have a better portfolio suited for the next 5 to 10 years so we don't have to worry about market timing. And we actually think with this inflation trade, too much money's chasing it. And there is the potential for some significant losses going into 2022 if that trades or stops. So with that, I will pause right there for any thoughts and questions on that quick, probably overly quick investment update there. And then we'll go into the life insurance segment. Does anybody have any thoughts on their own or questions on what I covered with investments?
Dave, I got one.
Yes, sir.
So looking at commodities, and you're looking at, durable goods, and with COVID, there's been such a huge backlog of materials, with just-in-time manufacturing, whatnot. Yeah. So you're seeing commodities rise. Is that attributed to the growth, is that attributed to people catching up due to such a lackluster ability to keep the manufacturing process going? Or are you seeing, more and more of just people going out and spending for durable, non-durable goods? What are your thoughts?
Yeah, a little bit of both. Obviously, going up because the demand got weird and some stuff stopped being produced that was being produced. You have an area like lumber, for example. So it's different across industries, quite frankly, Brad. And my highest level thoughts are commodities are never a good long-term play, because if a commodity really goes up in value, typically businesses will chase it and figure out ways to produce more of it. And by producing more, you now increase the supply and therefore it goes down. I mean, oil and gas is a great example. There are so many pumps and refineries that are profitable if oil's over $60 a gallon, but have to shut down because they're unprofitable if it's under 60. So if oil goes up to 80, all of a sudden it can now make money, start producing oil. Well, guess what? That's more supply, therefore it pushes the price down. You have areas like lumber where they were kind of scarred by 2008 and the building crash. And so what they've done over the last 12 years is run at very low just-in-time inventories so that they don't end up holding a lot of inventory or, sitting there with a lot of stuff people don't want if there is a housing bust like there was in 08. So it's almost like they've been producing at a 08 type level since then, just because they were scarred. And driving the price there. And then, just some things you couldn't get. So I hope that helps a little bit. I know it's not, perfectly precise, but it's one reason why we think this might be a trade that works real well for about 1 to 2 years, but then eventually doesn't. And whenever I'm feeling like, hey, I don't know if I can hold this for the next 5 to 10, I just don't want to time that wrong.
Right. Okay. Thank you.
Anybody else? All right. Well, I appreciate the question. And certainly, as y'all figure out when Mark and Karen start talking, hearing people besides me is much more interesting. So, and the back and forth. But all right, so let's talk about life insurance, because we get asked a lot about life insurance. It's a financial part of everybody's life in some level, at some point in time, whether they need it now or they needed it at some point earlier in their life. There's a lot of misunderstanding on purpose. And so one of the things we find, if we look at these 3 kind of mistakes people make, one, buying too much life insurance. And that's way different for a parent who's, in their 30s with young children than it is for a 70-year-old who's in retirement. So a parent who's in their 30s with young children, I don't know that buying too much life insurance is really an issue for them. They're typically doing term. And, when you're looking at the next 25 years of raising a child, I don't know that there is such a thing as too much money. But when I'm looking at a 70-year-old in retirement, typically they've built their net worth. They probably don't need it. Paying for life insurance using less than effective or ideal methods. And we're not going to spend a lot of time on this, but no, there's a lot of different ways you can do it. And depending on what types of policies you're buying, we can talk about strategies. And then the third is misunderstanding life insurance purpose and the reason for having it. And I'll just go ahead and say real quick here, my disclaimer on that one is, I do not personally believe life insurance is ever a good investment vehicle, but a lot of times you'll hear people using it for that. And so if you are using it for that, that's probably a key indication that we need to review that and possibly reposition either the way that's working or those investment dollars. So then, why would somebody need life insurance? And, there can be a lot of different reasons. Sometimes it can be for charitable reasons. Sometimes it can be for taking care of the loved ones if something happens, but it all comes down to one quick area. Typically there's a gap if somebody dies to accomplish their financial goals. And that can be things like your family. All right. I want my situation, my 6-year-old, my 3-year-old, I want to be sure they're able to go to college, and I need life insurance if something happens to me to pay for that. Could be financial obligations. So I think about, 2 business owners that are partners in a company, and, one spouse needs to buy the other owner out should something happen to that person. And then it could also be charitable impact. It could be, I want to leave X amount of dollars to my or maybe university, and I'm doing that through a life insurance policy versus cash, just because in some situations that is efficient. Maybe I'll give you a good example of where this might work. You bought some insurance, probably some whole life insurance you did not need when you were in your 30s. And I'm dealing with you now, you're 60 years old. We review this policy that's 30 years old. Not something I tell you to run out and buy now, but if you want to leave certain money to charity, this thing's 30 years old, since it's already on the balance sheet, it might make sense to just reposition the beneficiary of that policy versus other things. But there's also a lot of reasons we would do other things like give from an IRA, but these are all just things to consider. With how much life insurance you need, I would say this is something I find financial advisors and life insurance advisors to be sort of 2 different sides of the plan. I think the financial advisor like myself can answer this question really well. Structuring and positioning and placing that life insurance, I think, needs to go to a life insurance expert. But the reason we can position this really well is we understand what your goals are. We understand what resources you have. We understand your cash flows. And that's where this comes into play. And so there's really some neat science around that. And I will tell people, most of the time when you're retired, unless you have a really unique situation, like, okay, I have a pension, and I have some people that did this. I took the single life annuity on the pension instead of a joint life because it paid me more, but then I bought some life insurance to take care of my spouse if I die. That makes sense. But most of the time people have enough in investment assets to take care of those things. And then finally, how much to pay and how to pay. I cannot tell you how often I have people paying more than they should in this area, and just simply asking for a review on that can be very powerful. So thoughts and questions on that, and then I will bring up, I will bring up Karen and Mark. Anybody have any questions in the life insurance area before we do that? No? All right. All right, so let's bring up Karen and Mark, and this is really interesting stuff. They have some great stuff. And the first thing I would like to point out with Karen and Mark is, aren't they just great looking? I can't figure out who's better looking. Is it Karen or is it Mark? But they just look so happy. They're having so much fun there on Lake Lanier. So the word home, this word means so many things to so many people. Every day we have a special opportunity to get to know our clients and learn what their home means to them. We get excited right along with you, no matter what kind of home you're searching for, what search you're on. Upsizing, downsizing, lake living, investing, leasing, we've got you covered. So I will go ahead and here, let's see if y'all put it on speaker view. This way it'll bounce back and forth and bring people up a little bit more instead of looking at the slide. But Mark and Karen, why don't y'all just introduce yourself and tell the group a little bit about y'all's business and what you do? Because these are not just real estate agents. These are real estate investors that help people invest in real estate. They can be your agent, but they can do a lot more too. So I'll turn it over to you guys.
Thanks so much, Dave. You want to start?
Oh, put us on the spot. Now we're a little nervous. Well, we met in 2007, and Mark had been doing real estate for, I don't know, 20 years at that point. And he had been doing property management, which at the time wasn't too popular. But the market was crashing at that point in time, and I had just gotten my real estate license and started working with Mark. And then at that point in time, people, we were able to build up the property management business. We had probably 10 houses that we managed, and now we manage between 65 and 75. But it's been an interesting journey from that crazy market now to this market. We've learned a lot along the way, but we are able to help both people that, like in the down market, people were, they didn't want to sell because they couldn't get the money out for their house. So we did a lot of bridging people, like we bridged it out and managed their house. And then when the markets came back, they were able to sell. And now we are able to, people are still investing now, even though the market's high. It's just, lots of in between. Sorry, I'm sort of talking.
Yeah. Well, for the people that are investing with you guys with the market high like this, what impact have you seen that having on rents? And is that making it a better time to be a landlord?
Well, we're seeing a very interesting change in rents, along with purchase prices of homes. Our investments are primarily single family rentals. Also, we are looking at and are very interested in the multifamily side of things, but whether it's a single family or a multifamily type of property, rents are in our area are going up. But at the same time, in other areas where, let's say New York, Manhattan, Boston, in those cities, of the highest income population, those are seeing substantial rents plummeting, and it has to do with it's kind of a loaded question. I'm trying to unravel it open and give you the whole thing all at one time, but COVID was the primer that turned everybody on to technology. And the fact that we're sitting here talking on Zoom, in our home office, well, that had a massive impact in the national impact. And so it's for our little area that we take care of in Forsyth County and Georgia, what we're seeing is the folks that were paying $3,000 a month in, let's say, California for a one-bedroom apartment no longer have to live close to work. So they hop in and they move, they come over here they're bringing their high income with them, and they're coming over in droves. So they come over and they see these houses that we have that are 18 to 2,800 square feet in size, rents at $1,800 to $2,700 at the most, right, for a 6-bedroom, beautiful home with a basement and a backyard. And they're going, holy moly, God, this is wonderful. And whether they're buying it or they're leasing it, they're like, hey, we want this house. And they say, well, we've got somebody that will pay, $2,400 for it. Well, I'll tell you what, I'll pay you $2,700 right now, $2,700. And they still think they've got a deal. So there's the answer, kind of, and this is unwinding very quickly. All of this has happened within months, not a year, but within months. So it's just been unbelievable. Pricing for purchasing of homes and pricing for leasing homes are both driving upward in areas that are normally on average lower. So there's that answer on the rental part.
So real estate investing, I think, is a great addition to someone's portfolio. However, I think it's a horrible addition if people try to do it and don't know what they're doing. So you can go out and buy an S&P 500 index fund, really not understand the S&P 500 and still make money over time. If you go into real estate and don't know what you're doing, I think you can lose a lot of money and put yourself in a position you don't want to be in. What are some, and that's why, working with somebody like you that does know what they're doing, to me, makes so much more sense than trying to go it alone, unless you're qualified to go it alone. But what are some key mistakes or common mistakes you see when people first try to get into real estate investing?
I guess some of the first mistakes we see is they buy something that they think is attractive. They like the way the property looks. It appeals to them on an emotional level, and not so much as other things that could be financially more attractive. And between financial attractiveness and how it works emotionally can be absolutely polar of each other. And so where we come in to help a first-time investor who wants to get involved in this is we send them property. They look at it, they'll make comments like, hey, I don't really like the way that looks, or I don't like this or that. And we tell them, but we want to let you know that the rent demand in this area is this. And so you might pay a little extra for this property, but the return on your income or return on your investment is, from anywhere from 8 to 14% ROI. And that's why this property is more attractive. So for a first-time investor, it's hard for them to analyze all of that at one time when they're looking at a property.
What about as far as trouble with tenants or mischoosing that?
Lord.
I was just going to say that, once you get your property, or let's say you're moving, you want to rent out the property that you're leaving behind, type of thing, and you're going to do it on your own. The most important part is the tenant, finding the qualified tenant. Due diligence. You have to know there, of course, credit and criminal and those basic things, but you really have to be strict, and you really have to do your homework to make sure that people are really qualified. We do check criminal, we do check credit, we check income and rental history or mortgage history, depending on the situation. We've had a few owners that came to us after they put someone on their own into a house, or used someone that was not a manager, that didn't do this as a living, and then they it's come back to kind of bite them in the butt, because they have someone in there that they now have to evict, and then they come to us for help. They're like, oh, because we've had the question, like, you guys, I don't really see the value in the money for your fees and things like that, but it really does. We really can save people money in the long run by knowing we've been doing this for so long. We haven't had to evict someone that we've put in place in over 10 years. I think almost 12 years now. So wow. It can really, having to evict someone is a very expensive process.
That's like over 70 properties, and we have a zero eviction from, in 12 years, zero eviction rate. And I've been in the business for a really long time, more than 20 years. I have really good friends that are associates that own their own management companies, and they're very large companies. I've known them for as long as I've been in the business, and none of them can say that. They've had a fairly substantial eviction experience going through that. I have been through experiences with having to evict people, but that was before this 12 years. That was before we met, and that's kind of like my education in the past. I can tell everyone lots of horror stories that can happen leasing a property to an individual. Many things can happen, and the beauty of our being involved with either a first-time investor or a seasoned investor is that we're there as the partner with that owner, and we care about the house, we care about the decisions that are being made, and the people that we, the application and the things that we do to place a tenant into a property. And we know that that is the number one success. That's where it starts, is knowing how to place a tenant correctly, and being able to say no and decline folks, knowing how to decline a person. Those things are very complicated. And if an individual is doing this on their own and they meet someone face to face, and that's going to be the tenant, and there's a tendency to for the owner and that relationship to kind of get into a gray area where the owner is like, well, they seem nice and I really like so-and-so, and his favorite football team is mine too, so I think we're going to give these guys a chance. Everybody needs a chance, don't they, Sue? And all of a sudden they're into a problem, and the next thing we know is we're being called and saying, hey, we heard you guys are good at property management. We have a problem. Can you help us?
Right.
And,
oh man, I could see in other people on this call, I know would be the same way. I could see it with the right sob story, like wanting to help those people in all kinds of other ways. Oh my gosh, you're trying to rent, you can barely afford it, and you have a kid that can't play football this quarter because they don't have enough money. Let me buy him cleats.
yeah. It's okay. You don't pay. There's so many stories that we could tell you. It'd be a whole hour just doing that. But it is it's the most imperative thing that the tenant is selected, and then after that, it's knowing how to manage that property, and there's day-to-day management that goes on, which at the end of the day, for our services to new or seasoned investor, is that what they'll receive is a peace of mind, and that's also goes for anyone who has a property that they never thought they'd ever lease out, and they realize, we really don't want to sell this house because the prices are going up, and I don't want to sell the house. We're going to move to Germany, but then 5 years from now, we might want to move back. I want to just move back in this house. We can provide that peace of mind to an owner that we're going to get the best tenant in there, take great care of the property, and at the end of the day, this house will be here for you when you get back. And that is very important to people right now because there's so much transition going on.
So I always in the past have told people when they talk about real estate investing that, that's a very active experience. You have to put work into the maintenance. You have to put work into the tenants. If you work it right, you can make good money. Working with somebody like us is a little bit more of a passive experience. You can hire us and not worry about the portfolio, right? But you guys have the goal of kind of making it a more passive experience on the real estate side. So tell us, on average, how much time your owners spend on the houses themselves versus y'all, and then on the maintenance side, how you can help make that passive.
So, that's a good question, because we do all the work. I mean, they don't have, our owners really don't have to spend too much time. They get updates from us. They have, we let them know when we found a qualified tenant, give them, hey, we're ready to approve them. They're like, great. They ask a few questions, and then we take it from there, because we take care of the lease, all the documentation, everything. We do the move-in inspections. We, even if the house isn't ready, like let's say they need to get it ready, we have vendors that handle all of that. So, we spend hours, and they spend just a little bit of time, just, with an update.
So just a little bit more on that part, and to expand. Here's a great example. Let's say the investor is going to do that. The first home is going to be the home they lived in. And they're saying, we're going to turn this into an investment. I'd like to get into this business of investing. And so we want you to take our home and lease it out and take care of it. Well, first thing we say is, hey, all you need to do is find the place you're moving to. And when you move out, we're coming back in, and we're going to do a full analysis of what needs to be done to get the property ready. And we have vendors, we'll take bids. We do the whole thing, and all you got to do is say yes, no, yes, no. That's it. And we communicate the way they want us to communicate, whether it's a phone call and they do better with phone calls, or is it better with WhatsApp? We're in communication. We're really big on communicating with the clients, and we like to communicate in their way. Some people just want to hear from us via email, others, another way. But that's really their involvement, is answering an email. And if something isn't clear, I'm always on the phone with them to discuss, the details of whatever issue we're working through. And clearly, we've already done homework so that they can see it laid out in front of them. So they're not having to, have to rethink stuff, which is very helpful.
What's y'all's opinion on where prices currently are, kind of at an all-time high? And, is it possibly a bubble, or where do y'all see that going?
I think that it's not a bubble. And I go back to what's going on nationally. And I think that, for our area, which I will just say Georgia, we're establishing a new baseline. And there are folks who have sold their homes for that exact purpose. And that is, let's sell the home and rent, because I know we're going to have a bubble. And as soon as the bubble pops, we're going to make a ton of money, because we're going to go back in this market and buy, get a great deal. I don't think that's going to happen for a really long time. I think we're in for a different world for a very, very long time. And it's just because of all the factors that I discussed about how things have changed. And I don't think it's going to go back. I think at least for Georgia, in certain areas, these changes are here for a very long time.
Well, it ties to what you said too. Like, there's a shortage of, supplies. There's a shortage of, getting the supplies for building. So builders are building probably as fast as they can, but the demand is just increasing, and that isn't going to level out for a little while.
Mm-hmm.
Did we lose you?
No. You had a quick little blip. You see it now?
I see you guys on the corner, but it kind of went away on the front.
Yeah, it was a quick blip. We're good. So that reminded me of something I heard once about real estate, which is all real estate is local. So, thinking about the bubble, it makes me think like maybe you see prices cool in New York and San Francisco, where they've been so hot, but then, new paradigm. Is that fair?
Yes.
Right.
I think that's right.
Yeah.
Let me ask you this, because I think this also goes with the price increase, with mortgage rates where they're at right now. I mean, oh my gosh, it's so much easier to get into $1 million home than it used to be. And so with mortgage rates, even if people can afford to pay cash or things like that, are you seeing more and more people using mortgages? And how hard is it to get a mortgage on a rental property versus a regular property? Or how are people purchasing?
mortgages, it's not that hard, depending, I guess, on everyone's, capability, but the mortgages are, the rates aren't that much higher for a second, investment property. So most of our investors are leveraging their money and getting a mortgage.
Yep, they'll have cash and they'll say that they have cash if they're going to buy something. And we'll verify that. But then a lot of times, even though they've got the cash, they'll end up going, you know what? I don't know what I was thinking. When interest rates are at 3 and 4%, why wouldn't I want to go ahead and just get a mortgage? So they end up getting a mortgage to buy the house.
Yeah. When you and I went back and forth recently for one of your clients, a lot of times if they have investments and things like that with the appreciation, it costs more in taxes to liquidate those things than it does in interest to get a mortgage.
Right.
So I had another question that came in after y'all's bubble conversation that says, so what is the difference between now and 08? What are your thoughts there?
Oh, that's a good question.
I'm going to answer that, or can you answer that? I just got my computer's about to turn off because I didn't plug it in.
Oh,
I'm sorry. I'll be right back. Plug in.
I love COVID moments. That was such a COVID moment.
Well, let's see. So 08 versus now, because the market was crashing. The difference was then people had to move. Let's say you got a job transfer, you had to move, and you couldn't sell your house unless you were going to, either you were upside down or you were going to take a huge loss. So the reasons people were coming towards a rental was different. There were still people just investing and buying people, because of the market, they could get deals back then. And now investors, really, like most investors, they still want to find a property that's going to give them a good return on their investment. And there's opportunities in every market. Just have to look at all the details to find what works in the market. I know that doesn't want totally.
And I would love to answer that a little bit on the financial side too. And this plays into real estate, it plays into all asset classes. So there's only been 2 times in our country's history where we've had meltdowns or where credit markets freeze and basically financial markets don't function. And that is the Great Recession and the Great Depression. All other normal recessions, what happens is the financial markets and credit markets can still function. And so what you tend to have in 2001, 2002 is a great example of this. You tend to have certain areas and sectors that do horrible, but not everything. And so like in 2001, when you did not have a financial crisis, what you had was a bubble bursting in tech stocks, but other stocks and things did just fine. 2008, when you had a true credit crisis, everything went down. At least that's what I see as the difference. And that plays into the types of investments we're doing for folks also. So tell us, if people want to get involved with somebody like yourself and start expanding their investments into real estate, certainly I would say as their financial advisor, make sure you're in good enough financial conditions to to diversify out beyond just, normal savings. And once you're there, I think it's a great step. What should people consider, like, as far as who would this be a good fit? Not, how should they go about deciding if that's right for them?
Well, I think that anyone that's got some space in their portfolio for this type of investment, it would be very good. It's an answer. It's not much of an answer,
it's a longer term investment because the goal is to pay off the mortgage, and then you have cash flow, and then your house hopefully appreciates, and then you get tax benefits. There's so many aspects to it, and we actually, for our investors, we put together kind of a little worksheet that just breaks down all the different things. Of course, we don't add in appreciation because that's kind of unpredictable, but we look at what your ROI might be, what your tax savings possibly could be. And so every investment house that we look at, we break down all the expenses and benefits, and then share that with our investors to help them make a good decision.
A lot of times I like to talk to to the like first time buyers and that kind of thing when it's, their first property and they say, well, we're just now getting into our house and, well, I might sell it or I might keep it. And I'll go through that with them and say, well, if you do keep it, here's the plan. It's a slow plan to get rich, but it's it's very, it will happen. And we can move a tenant into the property and the rest is done. We'll take care of it and the tenant will pay the mortgage off. I know it sounds like it's a long time, but you would be amazed how quickly 15 years is going to go by. And you can look back and go, wow, I own this piece of property now. Now all the money, the rents and, minus expenses are now coming to me. That's one segment of building a retirement portfolio for a young person.
Yeah, cool. All right. Well, in closing, and we're coming up about 10 minutes till the hour, is there anything I didn't ask you that I should, or parting thoughts you'd like to leave the group with?
Go ahead.
Go ahead.
All right. No, I guess there's just so many details involved in, thinking about investing and property management that, it's hard to answer it all in one sitting. So just anybody can call us anytime, just let us know if we can answer any questions and all of that and go into detail on any particular side of that.
So I have a
Vivian, you just went to mute. You look like you're on a treadmill. Are you walking on a treadmill while talking to us? That is so helpful.
Yes, I am. Yes, I am.
Oh my gosh.
Can I ask my question now or no?
Yeah.
So I'd like to know, I wouldn't consider myself a real estate investor. I have one rental property and I live in another house, right? And I have so many questions around that. I really would like a 30-minute meeting with you guys just to ask my questions. I have so many decisions to make and so forth. So I'd like to hear your insight.
Great. Talk to you
I
about
can do that. Okay.
We'd love to talk to you about it.
Okay.
And so Juliana can make that connection, or let's see here if there's on the slide, I don't see any how to reach out. But anybody who wants to talk with Mark and Karen, we can connect.
Oh, it's on the, okay, perfect.
Mark and Karen, what's y'all's website? Do you have one?
SpaldingBrokers.com.
Okay, I'll reach out.
Okay.
There's no you in Spalding.
Okay.
SPALU. I'm sorry, SP. I don't know how to spell my name. SPALDING.
Okay. All right.
All right. Well, with that, I'll go ahead and start. Yes, ma'am.
Okay.
Sorry, I thought somebody else was saying things. Did y'all have anything else in closing, Mark and Karen, or?
We just appreciate the opportunity to meet you all.
Yes, thank you.
And thank you for inviting us. And we really, just enjoyed the whole thing. Thank you so much.
Awesome. Well, guys, in closing, there's a QR code up there. If you need to talk with me or anybody else on our team or any of our professionals network, like Karen and Mark here, you can use your phone, snap that. Juliana will connect you, put you in the right place. And, what a great conversation to remind us all how no one's an expert in all things. And I highly recommend when you're doing things, get experts. I'm good at investments. I'm terrible at electronics and plumbing. So I'm going to hire an electrician and a plumber to do things around my house that other people can do on their own. Same goes for when you think about investing in real estate. Don't go it alone. Work with people that know what they're doing. Tax mitigation. Yes, it's scary. None of us want to pay more than our fair share. Let's get a good accountant as part of the plan. Estate planning. Yes, I can help you quite a bit as a financial advisor, but let's get a wise attorney in place. And when you really put together this team of, I almost call it a virtual family office, what it does is it gets everybody rowing at their highest and best use and skill set and really gets you where you need to be. So glad y'all were able to sit in on this. I hope it was all useful. If you have any questions, feel free to contact us, and we'll see y'all again next month. I'll stay on for just a minute or two in case any questions come in, and otherwise y'all have a great day.
Thank you so
Have a
much.
great weekend.
You guys.
Thank you, David. Have a good one.
All right, guys, y'all too.